Good afternoon, and thank you for coming to this organizational meeting of the Committee on Ways and Means, Subcommittee on Oversight for the 115th Congress. Since this is our first meeting of the subcommittee, I'd like to start by introducing our members on my side of the aisle. The gentleman from Pennsylvania, Congressman Pat Meehan. The gentleman from Missouri, Congressman Jason Smith. The gentleman from Arizona, Congressman David Schweitzer. The gentlewoman from Indiana, Congressman Jackie Leworski. The gentleman from Florida, Congressman Carlos Carabiro. The gentleman from North Carolina, Congressman George Holding. At this time, I'd now like to recognize Ranking Member John Lewis for the purposes of introducing the members on his side of the aisle.
Well, thank you, Mr. Chairman, and let me first congratulate you on becoming the chairman of the Subcommittee on Oversight. I look forward to working with you in the new Congress. At this time, I would like to introduce the Democratic member of the subcommittee. I guess they are someplace on the way. The Democratic members are Representative Joe Crowley and Representative Danny Davis and Representative Earl Bubenauer. The gentleman from New York has served on the subcommittees since the 110th Congress, and the gentleman from Illinois first served on the subcommittee in the 111th Congress. I also would like to recognize our new subcommittee member, the gentleman from Oregon, who's unable to join us today. I look forward to working with all of you. And Mr. Chairman, it is my honor to serve with you on this committee.
And I want to thank you, Mr. Lewis, for your incredible leadership and background and what you've meant to this nation. I'm personally very proud to be here with you here today and look forward to working with you. And I'm committed to working with you for the next year or two. Thank you very much.
Thank you, Mr. Chairman.
I also look forward to working with all the members of this Congress. As the committee rules provide for the Oversight Subcommittee jurisdiction, include all matters within the scope of the full committee jurisdiction. Within that jurisdiction, we will be looking to identify waste, fraud, and abuse in the agencies and programs under the committee's jurisdiction. At this time, I recognize the Ranking Member Lewis for any additional comments related to the subcommittee's jurisdiction that he may have.
Well, thank you, Mr. Chairman. Thank you, Mr. Chairman. I agree that this subcommittee should look at waste, fraud, and abuse in programs within our jurisdiction. I also would like the subcommittee to examine how long-term budget cuts have affected the Internal Revenue Service, tax compliance, and tax services. I look forward to working with you and all of the members of our subcommittee as we move forward. Thank you very much, Mr. Chairman.
Finally, a couple of housekeeping items. As in the past years, the subcommittee will operate under the same rules as the full committee. At hearings, the chairman and the ranking member will each make an opening statement before we hear from witnesses. Other members may submit written statements for the record. The chair intends to require both witnesses and members to adhere to a 5-minute rule for testimony and questioning. With that, this organizational meeting of the Committee on Ways and Means, Subcommittee on Oversight stands adjourned. Part 2. The subcommittee will come to order. Welcome to the Ways and Means Subcommittee Oversight hearing on examining the effectiveness of the individual mandate under the Affordable Care Act. My focus today is on affordability. In Florida, 65% of our counties only have one carrier offering insurance to individuals in 2017. The state went from 8 carriers in 2014. Today we have 5 carriers, almost half, in 2017. In Manatee and Sarasota counties, 2 counties I represent, in my district, individuals went from being able to choose from among 3 different providers down to 2. This happened in just a single year. In addition, less options to choose from. The average monthly premium for Floridians enjoyed under the ACA increased by 19% this past year, according to the Florida Office of Insurance Regulation. Let me pause and look back 4 years ago when the Affordable Care Act was just beginning to be implemented in 2013. Then the HHS Secretary released a report stating a goal of Affordable Health Care Act is to increase competition and transparency in the markets for individuals and small group insurance, leading to higher quality, more affordable products. Fast forward 4 years later, 2017, we are seeing not only in Florida but across the country is a decrease in competition, an increase in premium costs. This increase cannot continue. It's not sustainable. We are here today to understand why the individual mandate, which today I think those fees that we're paying are over $3 billion, was a key component. The ACA is failing to subsidize or stabilize the health insurance marketplace. This discussion is important, not so that members on our side of the aisle or the other side of the aisle can score political points, but that's so we can focus on the facts. We need facts because there are real people's lives that are being impacted. When I talk to people in my district, it's clear to me that they are struggling. Although I mentioned some statewide and county level statistics, those numbers touch the lives of real people in Florida in terms of Florida families. We cannot stand idly by as health insurance under the Affordable Care Act becomes less and less affordable for our constituents. I hope this hearing serves as a first step to fixing what's broken. I look forward to listening to our witnesses and learning from the past so that we can develop better solutions for the future. I now yield to this distinguished ranking member, Mr. Lewis, for the purpose of an opening statement.
Again, Mr. Chairman, thank you. I want to thank you again and congratulate you on your new role as chairman of the Oversight Subcommittee. The two Democratic members of the subcommittee have now arrived. They didn't get lost in the tunnel, so they are here. Joe Crowley of New York and Danny Davis of Illinois. Mr. Chairman, I hope we can continue our tradition of strong oversight of the administration as we have in past Congresses. I would also like to thank each witness for being here this afternoon. Let me begin by saying what I've said at countless other hearings. The Affordable Care Act works. It works. Now I want to be crystal clear. For the record, the topic of today's hearing is a Republican idea. In fact, Governor Romney called it the ultimate conservative idea because it was based in personal responsibility. The individual mandate became a core part of the health care law. There's not a family in this country that has not been touched by the sickness or injury, I've said it before, and I will say it again. I believe in my heart of hearts that health care is a basic human right. It is not a privilege for the wealthy. It should not be reserved for the people that the insurance companies have decided are worthy of the risk. This committee has a mission, an obligation, and a mandate to think of those who have been left out and left behind. We cannot forget the 100 million Americans with pre-existing conditions. We cannot forget the struggle of those people whose care costs more than the insurance limit. We cannot forget the seniors in the donut hole who were unable to afford their medicine. I know that we can come together to make healthcare more affordable, more accessible for every person in our great country. I speak for the members on this side of the aisle who are ready to do the good work, the people work. We must be mindful not to harm the marketplaces where Americans buy insurance. We must protect children from being kicked off of their parents' plans. We must ensure that a woman is not charged more simply because she is a woman. Mr. Chairman, today we face a moral issue. In the coming weeks and months, we should come together to improve the law and not destroy it. At stake are not just the detail of policy, but the fundamental principles of justice and the very character of our great nation. Thank you, Mr. Chairman, and I yield back.
Thank you, Mr. Lewis. Without objection, other members' opening statements will be made a part of the record. Today's witness panel includes 3 experts. First, John Graham is a senior fellow at the National Center for Policy Analysis. Tom Miller is a resident fellow at the American Enterprise Institute. And finally, Dr. John E. McDonough is a professor of practice at the Department of Health Policy and Management at Harvard T.H. Chan School of Public Health. The subcommittee has received your written statements, and they will be all made part of the formal hearing record. You will each have 5 minutes to deliver your oral remarks. We'll begin with Mr. Graham. You may begin when you're ready.
Thank you, sir. Chairman Buchanan, Ranking Member Lewis. My name is John R. Graham of the National Center for Policy Analysis. I'll take my short time today to emphasize some of the commentary I brought up in my written comments, which I've already submitted to you and which I drafted before President Trump issued his executive order, which I think makes the individual mandate of even more pressing concern. Will it be enforced by the next HHS secretary? If it's not enforced, will it cause Obamacare to collapse? Or perhaps some of us might say collapse more or faster than we've seen it collapsing already. Politically, it's very easy to go after the individual mandate. It is the least popular part of Obamacare. However, it counterbalances the most popular part of Obamacare, the protection against being underwritten for pre-existing conditions. I think my message today could be worry not. Although the individual mandate is bad politics, I would also assert it's bad economics, or at least weak economics. Now, this is a very different message than we've heard for many, many years. It is true that it can properly be characterized as a conservative idea, and the high water mark of that was what we call Romney Care in the Massachusetts health reform. The idea, which is meant to appeal to conservatives, is that this demonstrates individual responsibility. We have a problem that hospitals' emergency rooms are jammed with patients who are not paying their bills, and so we have an uncompensated care crisis. Fair enough. Further, if people are encouraged to buy more insurance, they're more likely to get preventive and timely care and not have to go to the emergency room in the first place. Well, that would be fine. But the reality on the ground is it would only work if the mandate or the uninsured crisis was concentrated among high-income households. If it was folks like Bill Gates or Warren Buffett who were crowding the emergency rooms. I'm sorry, I should update that given the current administration. Peter Thiel or Sheldon Adelson were crowding the emergency rooms, but they are not. It is low-income people who are largely uninsured. They cannot bear to pay the fee or tax or penalty or whatever we want to call it for violating the mandate. So although it is appealing to conservatives to think that this imposes individual responsibility, in fact, what its real effect is to give cover to significant growth in government spending and government programs, which is fine in some people's minds, but not for conservative minds, I would suggest. Now, whatever we want to call it, the law, as you know, calls it a penalty. CMS, healthcare.gov now calls it a fee, but whatever we want to call it, it is inefficient in a very mechanical sense. A recent memo from the Internal Revenue Service points out that 6.5 million people paid the fine in 2015, but 12.7 million were exempted for various reasons. Again, emphasizing the point that most people whom you think you're affecting with a mandate cannot afford to pay it. How much was raised from the mandate? $3 billion. Now, to me, that sounds like a lot of money, but as you know, in the healthcare system, that's nothing. We spent $3.2 trillion on healthcare in this country in 2015. If we compare the Congressional Budget Office score to about Obamacare, the Affordable Care Act in 2010 versus the update in March 2016, it shows there's a slight reduction in anticipated revenue from the tax or penalty from the people who do not obey the mandate. But this is not because more people are getting private coverage and exercising their responsibility. In the original CBO score, the CBO estimated, this is back in 2010, that the Affordable Care Act would leave 22 million uninsured in 2016 through 2019. Recently, that's been upped to 27 million. Those with employer-based coverage, according to the original estimate, was 163 million. In the new estimate, it's down to $152 million. In 2010, the Congressional Budget Office estimated Obamacare exchanges would enroll 21 million people. In 2016, and we know where that's gone, increasing to 24 million in 2019. It's down to an estimate of 20 million people in 2019 under the current law, according to the latest CBO estimate. Who are getting insured? It's Medicaid. And the Medicaid dependency, the estimates according to the CBO, have gone up by about 1/3. So the coverage through Obamacare is not through enforcing any kind of individual mandate. It's through more government dependency on Medicaid, which is costing us far more than we're getting from an individual mandate. Thank you.
Thank you. Mr. Miller, you're up next.
Thank you, Chairman Buchanan, Ranking Member Lewis, and members of the subcommittee for the opportunity to testify today to examine the effectiveness of the individual mandate under the Affordable Care Act. The shaky case for the individual mandate is based on mistaken premises, faulty economic analysis, short-sighted politics, and flawed health policy. Opponents have found the mandate to be administratively challenging, politically unsustainable, economically unnecessary, beyond the scope of a proper role of government, and constitutionally questionable. Most arguments in favor of the individual mandate usually presented as a necessary, though far less popular means to more laudable ends. Well, they certainly got the last part right. The individual mandate touches exposed nerves and offends core principles in ways that other elements of the modern regulatory state do not. The individual mandate has consistently remained the most intensely unpopular provision of the new health care law since it first took shape. One of the strongest driving forces behind office holders resorting to the individual mandate is the desire to substitute off-budget mandated private funds in place of more visible taxes that they would otherwise find hard to impose to meet their insurance coverage goals and finance additional health care spending. But shifting costs less transparently is not the same as actually reducing them. The type of mandate that the U.S. political economy and healthcare system is likely to deliver in practice is very different and more complicated than what might be assumed under best-case theories. Trying to force people to buy insurance they cannot afford or pay much more for such coverage than it actually appears worth to them remains politically and economically difficult. As a consequence, the individual mandate continues to face significant political limits on how large the mandate's penalties can be, how aggressively they can be enforced, and how much compliance the mandate will produce. Hence, the mandate's best future for continued survival involves operating much more as a gentle suggestion or nudge rather than a more polarizing command. Because the penalties for failing to comply with the mandate are rather modest in proportion to the likely average premium cost of required coverage, millions of individuals have calculated that it's much less expensive to pay the penalty than to purchase mandatory insurance. Projections for compliance versus penalty payment under the individual mandate by the Congressional Budget Office consistently have overestimated the degree of compliance. In practice, the Internal Revenue Service has reported noticeably higher numbers of individual mandate penalty payers despite lower amounts of actual revenue collected. CBO also has tended to be on the high side of claims that the Affordable Care Act would rapidly and substantially increase coverage in the new law's exchanges for individual coverage as well. Rather than re-examine the flawed foundations of its previous assumptions, CBO appears to have recently doubled down on them. The CBO estimates are flawed in overstating baseline assumptions for future growth in the ACA's version of individual market coverage, exaggerating the response rate of those subject to the mandate before and after its possible repeal, misestimating Medicaid coverage effects, and setting unrealistic parameters for future health policy changes. In fact, the most significant force behind the size and shape of insurance coverage gains has been large taxpayer subsidies, primarily through the expanded Medicaid program. Enrollment rates for the ACA exchanges are highly sensitive to one's income and premium tax subsidy level. Enrollment by younger and healthier risks, which is supposed to be the primary target of the individual mandate, has failed to reach expected levels. There are a variety of alternative policy remedies that could be pursued if the individual mandate is either limited further or repealed. They include extension of HIPAA-like protection against health status risk rating to individuals in the non-group market who maintain continuous qualified insurance coverage while switching between health plans, or imposing penalties in the form of higher insurance premium surcharges when eligible individuals fail to obtain or maintain minimum qualified coverage during annual open enrollment periods, or tightening eligibility verification further for special enrollment periods between annual open seasons and ACA exchanges, or enabling default enrollment in minimum qualified coverage costing no more than the value of applicable federal taxpayer subsidies for insurance, or providing a different mix of taxpayer subsidies for obtaining and maintaining qualified insurance coverage in the individual market that are more generous to younger and healthier individuals who have declined coverage thus far, or as a last resort for some and a first resort for others, actually enabling and incentivizing insurers to offer coverage that is less expensive and more attractive to potential uninsured customers. Thank you, Mr. Chairman. I look forward to your questions.
Thank you, Mr. Miller. Dr. McDonough, it's your testimony.
Pardon me. Thank you. Thank you, Chairman Buchanan, Ranking Member Lewis, members of the committee. I'm John McDonough from the Harvard Chan School of Public Health. I would just note from my bio in my statement that I, between 2008 and 2010, was a staff person for the Senate Committee on Health, Education, Labor, and Pensions, and worked on the writing and passage of the Affordable Care Act. So I am a former Senate staff person in recovery, and I think most of you will understand that that is unfortunately a terminal, lifelong pre-existing condition that I just can't shake as much as I might try. So thank you for the honor of speaking before you. I have a written statement, and I will just highlight my 6 main points in it and then engage in conversation on whatever matters you find of value talking with me about. First, the individual mandate, so-called, the individual responsibility requirement of the ACA is a core mechanism to ensure a healthy risk pool and more stable premiums in a guaranteed issue market that bans the practice of medical underwriting and pre-existing condition exclusions in the individual health insurance market. It is core and it is recognized and is not the only way to address it, but it is an essential component of the law. What we in Massachusetts, where I was involved in the passage of the Massachusetts health reform law, refer to as the three-legged stool. Second, to eliminate the mandate and to leave in place guaranteed issue is a sure and proven formula for major disruption in the individual health insurance market nationally, and that's a concern that I think is neither speculative nor hypothetical. We have seen it played out in a number of states over the past 25 years. Third, I would mention, as Dr. Graham has also mentioned, that between the late 1980s and the latter part of the last decade, the individual mandate was largely a policy idea that was championed by conservatives, starting with Professor Mark Pauley and Stuart Butler in the late 1980s, and only in the latter part of the last decade was it embraced and accepted by Democrats. Its roots are entirely based on the notion of individual responsibility and shared responsibility, as Governor Mitt Romney stated repeatedly during the Massachusetts health reform experience. Fourth, there are other ways to get at the intent and purpose of the individual mandate. It is not that mechanism or anything else. One mechanism is in late enrollment penalties. Another mechanism is referenced in Speaker Ryan's Better Way plan in terms of continuous coverage requirements. I would caution that I think that if you compare the individual mandate and continuous coverage requirements, I would regard the continuous coverage requirements as far more onerous and punitive in terms of consumers, and would urge caution before you go too far down that path. Fifth, I find no empirical evidence that suggests that the individual mandate has anything to do with the stresses that have been experienced in the state and federal health insurance exchanges over the 2007 enrollment and now carrying out period. There are other causes that I think more effectively explain those problems that are going on in those markets, and be happy to talk with you about those. And finally, I would only suggest that the suggestion that the size of the individual mandate penalty should be increased to enhance the uptake of individual health insurance is a mistaken notion. I think far more at the core in terms of enhancing enrollment would be to address the lack of adequate affordability in the health insurance exchanges right now, particularly for consumers between 250 and 400% of the federal poverty level. Those are my main points, and I look forward to further conversation. Thank you.
Thank you, Doctor. I want to thank all of you. It's excellent testimony. We now proceed to questions and answer session. For the purpose of today's hearing, I will hold my question until the end. I will now recognize the gentleman from Pennsylvania, Mr. Meehan.
Thank you, Mr. Chairman and the ranking member, and I'm going to look forward to working with both of you and the full committee on this important agenda before us, and there couldn't be a more appropriate place to start than with this particular issue. One of the concerns that I hear back in my district frequently is the frustration of everyday Americans with federal government mandates telling people this is the way you're going to live your lives. It'd be bad enough if that was all that there was to it, but the fact of the matter is we're talking about something which, notwithstanding the opening statement of my good friend, the ranking member, the ACA does not work. And I was pleased to see Mr. Miller talk about the concept of exposed nerves from the federal mandates that are happening. And we hear words about mandate, coercion. Those are the kinds of things that I think are affecting people. And then you look at the facts. We've had this program, premiums have been rising by double digits for the very people that Mr. McDonough talked about in the hardest places to be able to pay. 1/3 of the counties now have only a single insurer. The exchanges are consisting largely now of older and less healthy people. And I look at my own district in Pennsylvania, and we've taken the time to ask people to weigh in. Premiums for Obamacare plans of Pennsylvania are up 33% in 2017. Each year there's fewer to choose from. In 2016, there were 13 plans. Next year, there will be 8. And I listened to the individuals in their own words. Mike from Boyertown shared with me his concern, the cost of our health care insurance. We have coverage from healthcare.gov, and our rates are increasing from $1,600 to $2,600 a month. These are working class people. Only 6 plans are available, and the lowest cost one is still over $2,000 per month just for my wife and I. Fred from Lansdale wrote, I received my annual health insurance rate increase for 2017 yesterday. My rates went up from $2,500 to over $3,750 per month. Per month. Last year's increase was devastating. This year's increase is even more overwhelming. I'm self-employed. I only had a few short years ago. This news is devastating to my family. People are voting with their feet in this. The CBO just came out and released its most recent, just this week, expects a sharply lower number of participants in the Affordable Care Act for exchanges in 2017. CBO said the number of participants in the exchange was expected to be 10 million in 2017. So clearly we've been sold a bill of goods. It isn't working. Mr. Miller, what conclusions can you draw from this kind of revised estimate?
Well, it's not working according to plan, is the short answer. But to connect this up with the subject of today's hearing, this reflects, in effect, an overinvestment in a set of policies that did not come together and work as promised. And part of what you are seeing in the higher premiums and the restricted availability of plans, the losses in plans, is everybody was supposedly saying it's all going to work like clockwork. Everybody's going to go into the exchanges. That's what CBO projected. They weren't talking to the people on the ground. And so we've got a different experience in practice than the one that was proposed to us in theory. Now, we can keep trying to implement that theory, saying sooner or later it'll work out. That seems to be what CBO is mostly projecting. On the other hand, we could try to say we need to take this into the shop and change the mix around. And we need to get back to having health care coverage that actually matches what people are willing to pay for and can pay for.
I am so glad you said that about taking it into the shop, because here is the big misnomer in this whole discussion. This idea that somehow there's this Republican effort to just drop the thing and leave everybody on the street, instead of the real genuine effort, which is to take something that isn't working and try to get it to work better. We only get 40% of the people who are eligible for these exchanges into it, and yet we need about 72% to make them work. So how do we incent that other 30% to get in? Is it by mandates, or is it by working on the kinds of things which are being put in place to lower the cost, to make the better availability, to make allow the programs to be the kinds of things in which they have a choice to find the insurance that fits them? Isn't that the better way to get that remaining 30% so we can get the kind of exchanges that can actually work?
We've tried the weak punitive approach, or we know what's best. We might want to try some positive incentives to find out what, in fact, where the market is.
Mr. Chairman, thank you. I yield back.
I now want to recognize the distinguished ranking member, Mr. Lewis, for any question he might have.
Thank you very much, Mr. Chairman. Dr. McDonough, one of the things I'm most proud of in today's law is that because of the ACA, Americans with pre-existing condition are able to get insurance. Can you discuss why the individual mandate is so necessary?
So thank you for the question, Representative. The concept of guaranteed issue, which means that insurers must issue coverage to applicants, regardless of their prior medical history, regardless of their current medical status, is one of the most popular features of the Affordable Care Act. It is a policy that was implemented in various states starting in the 1990s. About 8 states in particular, 5 states implemented it. All 8 states implemented it without an individual mandate. And all states, when they did it, saw significant substantial disruption in their individual health insurance market because people were going in and purchasing coverage when they felt they needed it and then dropping out of the market when they got whatever services they needed. And so it was a damaging risk pool that created what's referred to as an insurance death spiral, where premiums go up, and as premiums go up, more people drop out. We saw that in Massachusetts, New York, New Jersey, Vermont, and other states, Kentucky, New Hampshire. Some states did guaranteed issue without a mandate, and when they saw the impact, they withdrew and they stopped guaranteed issue. Other states, like Massachusetts and New York, did it and had damaging impacts in the market and kept the policy in place. But guaranteed issue is one of the most popular features of the law. Americans don't like the idea that to get coverage, you can only get it if you don't have any adverse medical history that would disqualify you from coverage. And they don't like the individual mandate, and they usually don't understand that there's a link between the two of them, and that guaranteed issue can't function effectively in an environment without some kind of coverage responsibility, some kind of shared responsibility on the part of individuals. So that's where it comes from, and so the linking together. And so Massachusetts in 2006, in its health insurance reform law, for the first time put together and actually implemented an individual mandate and guaranteed issue together. We saw a dramatic drop in our rate of uninsurance. We saw a stabilization of premiums in the individual market, and it was a strikingly successful experiment in terms of the intended influence on the individual health insurance marketplace. So we saw it at work, and it was then the design feature that people thought made sense in terms of coming up with the national reform that is the Affordable Care Act. So that's where it came from, and that's why it's in there. It's an essential piece. So Americans love guaranteed issue and don't want to lose that, but guaranteed issue without some kind of coverage requirement, it creates a serious market disruption, which people would not want to see.
Thank you very much, Doctor. Will you talk about the best ways to get people enrolled in insurance and engaged in their health care? Is it better to increase financial assistance or to follow the Republican suggestion, such as the Better Way Health proposal?
So the concern that I have with the Better Way Health proposal and with some of the other plans that are forward is that the United States in January 1st, 2014, banished medical underwriting from our health insurance market for the first time in our history. And overwhelmingly, Americans like that reform, don't want to go back, and that seems to be fairly bipartisan. The concern that I see in terms of the suggestion to have guaranteed issue, but only for people who can maintain continuous coverage, is that there will literally be, in a very short period of time, tens of millions of Americans who will then fall back into the circle of people who will be newly subject to medical underwriting and have their insurance ability, their ability to buy insurance rated based upon their medical history. I think that would be a terribly unfortunate step backward that Americans would not appreciate and have rejected that approach.
And thank you very much, Doctor.
I now recognize Mr. Smith from Missouri.
Thank you, Mr. Chairman. Back in December, I held healthcare roundtables throughout our congressional district in southeast and south central Missouri to just hear from farmers, small business owners, families of the experiences that they've had under Obamacare. And the message was very consistent. Forcing citizens to buy a product they simply didn't want or suffer a tax penalty is un-American. Especially when in many cases that product is too expensive and not adequate. As a gentleman from Pennsylvania mentioned briefly of the exchanges in his state going from 13 to 8, I think were the numbers. Out of the 30 counties in the 8th Congressional District of Missouri, individuals who are forced under the individual mandate, you know what their options are? Out of 30 counties, 26 of those 30 counties has one choice. Looks like adequate options. Absolutely not. Take the case of Doug from southeast Missouri. He's a 61-year-old divorced cabinet maker who helps his 20-year-old daughter and ex-wife pay for their health insurance. Doug started a small business just over 3 years ago. He wrote me, this is what he wrote. My business is beginning to be profitable. However, with startup cost and normal business cost, cash flow, etc., there is nothing left of the budget for my personal health insurance. I've been without coverage for 2.5 years. I make too much to qualify for subsidies, not that I would take advantage anyway, and do not make enough to pay the premiums after paying for everyone else. The ACA penalty adds injury to insult. Insult because the whole mandated mess is unconstitutional. An injury because I usually have to take out yet another business loan to pay my income taxes after the ACA penalty. I checked prices for insurance for a 61-year-old man in his county of Missouri, and it is somewhere in the neighborhood of $900 a month. That's more than the typical rent payment in southeast Missouri, and would likely represent one of the largest expenses he'd be paying. So who is the policy really helping, I ask? It's definitely not the lower and middle class in southeast Missouri. The mandate targets individuals, but it also hurts the health care facilities and hospitals who help serve them. During one of our roundtables, the CEO of one of the federal qualified health centers, testified that in their area, 37.3% of the population they serve are uninsured. But yet everyone's required to have health insurance under the individual mandate. The mandate was designed to address uncompensated care, but it didn't. Here's the bottom line. Obamacare's individual mandate has failed. Special enrollment periods and exemptions by the Obama administration created an environment that goes completely against the idea of a mandate. That created an unfair burden on facilities in my district that offer care to low-income individuals. My question is to Mr. Miller. Your testimony highlighted weak enforcement and weak compliance as challenges with the individual mandate. Can you explain in more detail how the individual mandate harms the low and middle income people it was supposedly designed to help?
Well, I'm trying to go backwards from where you're talking about. Part of it is because it didn't deliver what it said it was going to do. In terms of the coverage effects you saw, where those people went was primarily into Medicaid to the extent they were lower income. That's what they ended up choosing rather than the exchange-based coverage, and that's where they've ended up. However, insurers along the way have incurred some substantial losses within these exchange markets because their original business plans assumed a different set of enrollment and a different level of compliance with a mandate which was never enforced in that manner, so that the mismatch has created, in effect, the compression of plans and the rising premiums. There are other distinctions along the way. Some of the statements that have been made about the scope of uncompensated care costs, if you look at the past historical record, vastly exaggerated. Now, this law has a lot of moving parts. We took away some of the funding for that uncompensated care on the assumption it was going to be made up for by the increased enrollment. That didn't match up. We've had behavioral changes which indicate that people who are nominally insured are still going to emergency rooms anyway. So it's hard to isolate the mandate alone along this broader mosaic of basically a floundering law which has many different theories behind it that don't work out in practice.
Thank you, Mr. Chairman.
I now recognize the gentleman from New York, Mr. Crowley.
Thank you, Mr. Chairman. Thanks very much. I appreciate this hearing today. If I can, I just want to, my good friend, I mean this with all sincerity, from Pennsylvania, I think the world of Pat Meehan, and he knows it. He made a reference at the end of his comments, where does the notion or idea come from that Republicans want to repeal without replacing? And I would just note for the record that we've had 65 attempts to repeal the Affordable Care Act or Obamacare over the last 6 or so years without ever once offering a replacement. Maybe that's where we might get the idea that you all simply want to repeal the bill without replacing it. Just an observation. Mr. McDonough, my home state of New York provides a valuable example of how the requirement to buy insurance is a critically important aspect of the ACA that provides stability in the individual insurance market. Before the ACA, New York's individual market did not include an individual mandate, so the market did not have enough healthy individuals. As a result, monthly individual premiums reached over $1,500, and less than 20,000 people had enrolled. Now, as a result of the Affordable Care Act, premiums for individuals are 50% lower than they would have been without the ACA. The number of New Yorkers in the individual market has grown by 270%, and planned participation is more robust. 16 insurers offer coverage in the individual market, and 21 serve the small group market. Mr. McDonough, would you say that New York's experience with the mandate illustrates just why it is so critical and the dangers that could happen if it is repealed or undermined?
So thank you, Representative, for that question. I think it's important to recognize that the issues with the federal and state health insurance exchanges from New York, from Pennsylvania, from Missouri, from all of the different states vary. So there are some states that are going through very significant disruption and very critically high rises in premiums. There are other states, like for example New York and California, that are doing very well actually in terms of a moderate rate of growth. There's the striking example that we have of the state of Alaska. Alaska last spring had projections that the premiums in their individual market were going to go up by over 40%. In the summer, the Alaska legislature, with their governor, agreed to create a reinsurance pool within the state individual health insurance market just in Alaska. When they did that, that single act, they brought their projected premium increases from 40% down to 7%. So part of the difference, and it's not exclusively this, but it is very much a factor, part of the difference is that states that have aggressively grabbed and worked to take a leadership role in helping this new health insurance market to work and succeed have seen strikingly better results in terms of premium growth and in terms of plan participation than states that have, for their own legitimate reasons, been very hostile to the implementation and have had not only nothing that they wanted to do to help it, but actually worked consciously and proactively to try to undermine the implementation of the law. So there's a real difference there, and I think it's worth understanding that you can make differences happen here. States need to be part of the solution, and the states that have done that have made a real difference. Sorry for too much time in that answer.
That's all right. Mr. Chairman, I have a letter from the Department of Financial Services in New York State, which oversees the insurance industry in the state. I would just ask that we include that for the record to the committee.
Yeah, that's fine.
I just wanted to say, listen, this is incredibly complicated. All the parts that go into making the Affordable Care Act work itself. We talked about, you know, the mandates. We haven't talked about other aspects of it that have in the whole that make it actually work, or in theory work. Listen, I understand the frustration. We've been frustrated for the last 6 years. We haven't found any partners to actually improve the act as opposed to just repealing it. I think my colleagues on the other side of the aisle realize now, as the new president, how difficult it is to take away the sweets. It's the vegetables, I think my colleagues have had a difficult time swallowing in order to get to the sweets first, but I think they're learning that, and I yield back.
I now recognize the gentleman from Arizona, Mr. Swigert.
Thank you, Mr. Chairman. And those of us with a sweet tooth will work on that. And Mr. Chairman and fellow members, and obviously the panel, being from Arizona, when you use the term disruption, we're one of the epicenters of it. You know, if it wasn't for almost a charitable gift by, I think, our Blue Cross Blue Shield going into a couple counties, I would have had counties. Remember, my state has only 15 counties, so our counties are huge. They would have had no offering. So could I beg of you, and this is going to be a little different, but this is something staff and I have been trying to hunt for years. Could we do a little math together? I need some help on something. What I'm hunting for is, and we've even had researchers from Kaiser and other people try to help us, and the administration has been willfully difficult. And maybe it's because the way the data sets are collected, maybe it's obfuscation, maybe it's perfectly innocent. If I go back at the end of fiscal year 2016, we functionally have had, what, 3 years out there where there was product offered. How many of our brothers and sisters gained coverage that either did not have coverage before or who were not Medicaid eligible? And when I say did not have coverage before, truly had gone long-term, not where they had 3 days between jobs and we called them uncovered. But how many, I mean, what's the real number? How many folks now have coverage by the end of fiscal year 2016 that did not have any either access to coverage or weren't Medicaid eligible? Can anyone give me an honest number? This is an open, this is a fly ball for whoever can pitch it back.
I don't usually like to do this in a hearing. I may have to quote John Gruber, and I only do that every other couple of years because even a stop clock may be right a couple of times a day. Based on those recent calculations, approximately 60% of the coverage gains came from Medicaid. There's a little bit of a dispute as to how much of that is expansion Medicaid and how much of that is old Medicaid.
Look, we have 2 minutes and 30 seconds to play here. So, okay, let's say it's 60% of the population gained it through Medicaid. Then of the remaining 40, I've seen some numbers out there that say a substantial portion of that had either access to or had coverage at some time before. And
Some of that's old Medicaid. There's a provision where if you go into the hospital, you can get signed up for Medicaid. That's under old Medicaid as well as new Medicaid. There were states that were already expanding before 2014. He makes that old Medicaid.
So is it-
Some of it came from the individual exchanges, though. That's a
Okay,
fact.
so who
but
are
probably only about half of the exchange coverage, more or less, are actually net uninsured getting coverage. Some of them where people got pushed out of the other part of the individual
Yeah,
market.
and look, I understand this is a little difficult and there's a lot of moving parts here. As someone just said, it's complicated. So are we now down to 7 million?
We could be down to 6 or 7 million.
Okay,
And again, these are fuzzy numbers because we pretend that our data is excellent and you can rate 4 or 5 different surveys and get different numbers
but let's
and
say-
make different assumptions.
But in the next minute and 30 seconds, let's pretend we're accountants. Okay, so over the beginning of this law till the end of 2016, how much has been spent? And when I say spent, I mean by the federal government, the state government, individual premiums, losses from insurance companies, others. What's my total dollar amount? Because I've seen numbers at 500 billion. I mean, I've seen some really interesting numbers that if you do a true all-in math, and you see where I'm going. If for 3 years of coverage, my all-in cost to help 7 million, I can almost do that in the top of my head. Someone's going to correct me later. $68,000 per life. I mean, I'm buying their health coverage, and I could have probably bought them a really nice car. So something's wrong in just if we take a step backwards, whether it be the individual mandate or just the basic math of if we all agreed we want to help our brothers and sisters out there, our total dollars per total lives covered, something's horribly wrong in what we're doing. Am I being unfair?
I would just respond, Mr. Schweikert, by saying that I think that 6 million is a significant understatement, and I don't want to put out a number that I can't defend.
I would be elated if you could do me one of the grandest favors of all, because we really, and my staff is back there laughing at me. I have a couple of years of my life looking for this number and talking to really smart people like yourself. Help me find real math, because I come from a world of the math is the math is the math. But right now, I'm looking at numbers where I could have bought their coverage and bought them a nice car. Something's horribly wrong in what we're doing. Thank you. Yield back, Mr. Chairman.
Happy to do that, sir.
I now recognize the gentlewoman from Indiana, Ms. Lewarski.
Thank you, Mr. Chairman. President Obama promised over and over again, if you like your doctor, you can keep your doctor. If you like your health plan, you can keep your health plan. And despite these repeated pledges, we know now that these statements were completely untrue. In fact, in the fall of 2013, millions of Americans started receiving plan cancellation notices. PolitiFact ranked President Obama's statement as its lie of the year in 2013. But it wasn't just the immediate loss of plans. People are still losing them. For example, in Indiana last year, 4 insurers left the exchange, leaving Hoosiers with fewer options. That's 50% loss of our own plans. Recently, I heard from a constituent of mine from Stark County in Indiana. He's had 2 open heart surgeries at Mayo Clinic that requires him to be on blood thinning and other medications as well as periodic checkups. He had a private health insurance plan that he liked, covered his medical needs, but in 2015 it was knocked out by Obamacare. He was forced to buy a health care policy on the marketplace, but unfortunately discovered in an annual checkup at Mayo Clinic that his doctors were not in the network, and because of that, and because they were out of state, they were out. He was forced to pay thousands of dollars out of pocket for the visit, in addition to thousands more out of pocket for the prescriptions. When he appealed to the Indiana Department of Insurance, he was told there was no marketplace insurance plan that would cover his doctors at Mayo Clinic as a Hoosier living in the state of Indiana. He recently learned that his marketplace plan through United Healthcare won't offer individual market plans for his area in 2017. He was forced back into the marketplace again to find a new health care plan that still will not cover his out-of-state doctors. It reinforces to me that for many Americans, this law is not working as promised. And Mr. Miller and Mr. Graham, I want to direct this to you. Isn't it true that the individual mandate was supposed to increase competition on the exchanges by ensuring that people sign up, thereby encouraging insurance carriers to offer more choices and broaden those networks?
That was the stated objective, and as you've described it, it's not been the case. So I agree, I guess would be my answer.
Mr. Miller?
As I like to say, it seemed like a good idea at the time, although unlike Mr. McDonough's testimony, it's been a bad idea for many of us for a long period of time on the conservative Republican side of the aisle, just to rewrite history a little bit, going back to the 1990s. What was proposed wasn't executed. And it wasn't going to work that way because the grand design in theory did not reflect the reality on the ground. Some people gained under this arrangement. There's no question about that. If you were a low-income person suddenly getting substantial subsidies for coverage, you might not be crazy about that coverage, but you'll say you came out ahead. There are other people in that market, though, who had something that they were comfortable with, or at least were ready to settle for. They were told that's not good enough. These are the folks who got moved out of other parts of the individual market and ended up with less effective choices and ones they didn't want. And that's what you're mostly hearing from among your constituents.
And that's not going to turn around on its own. I think the President Obama's Council of Economic Advisors, just before they left, asserted that the insurers have now got it figured out, everything's under control. The first 3 years, we had the training wheels on board, but now we're good to go. That doesn't make any sense. You know, last year, from 2016 to 2017, you had by far the worst premium increase, 25% nationwide average. It's not getting better, it's getting worse. It's like the insurers are having more and more trouble every year they stay in the exchange.
Well, I guess my follow-up is when insurance networks have become so narrow that individuals like my constituent, and there's many of those in Indiana, I just talked about one, when they lose access to their doctors, what does that say about the individual mandate's effectiveness to begin with?
I think it says you're on the route to Medicaid for everybody, where there's very poor access to care in many cases. So folks like, I know some of the members have given testimony from their constituents. The whole structure is so terrible. You know, you earn an income that's, you know, you're not Medicaid eligible, so you can't even get the poor access to care that Medicaid offers. You might get some tax credit in the Obamacare. Maybe you make too much money for that. It's hard work to figure all that out, you know, and then the IRS comes after you next year and says you owe money back. So the complexity is far too complex, and I think when you go from one insurer to no insurer, as in Arizona, you were very lucky. I mean, what is a market where there is no insurance offered?
Right.
It's not a market.
I appreciate it. Mr. Chairman, I yield back.
I now recognize the gentleman from Illinois, Mr. Davis.
Thank you very much, Mr. Chairman, and I want to thank all of our witnesses who are being very helpful as we deal with one of the most complex issues and problems that I think we face today as it relates to health care. I represent the state of Illinois in the 7th District, which contains more hospital beds than any other congressional district in the country. The Affordable Care Act, which also has been beneficial to the 4 major medical center operations, medical schools, that we are also fortunate to have. The Affordable Care Act has greatly improved access to care for tens of millions of Americans. Enrollees now have access to medical homes. In general, no longer have to rely solely on a hospital emergency room, and have the comfortability of knowing that when they need care, it is available there for them. Today, more than 1 million Illinoisans have health insurance coverage as a result of ACA. Either view of the law's Medicaid expansion or its health insurance marketplace, and the majority of whom were uninsured prior to September 2013, when the ACA's coverage expansions were first implemented.
Because of ACA, the nation's uninsured population has dropped dramatically to less than 11% currently from nearly 17% in 2013. If Congress repeals health insurance coverage, Illinois would sustain a potential loss of $11.6 billion to $13.1 billion in annual economic activity and about 95,000 jobs lost. Ultimately, any attempt to repeal the ACA should be accompanied with an appropriate and responsible replacement plan that at a minimum ensures access to coverage for the more than 20 million U.S. residents who now have coverage as a result of the law. If Congress does not make repeal of coverage contingent on adoption of an ACA replacement plan, then lawmakers should also correspondingly repeal the significant hospital payment cuts that helped pay for ACA's coverage expansions. This is important for Illinois' hospitals and health systems, which to date have had to absorb the more than $1 billion in Medicare reimbursement cuts to pay for the cost of the law's coverage expansion. For example, Northwestern Medical has 7 hospitals alone, including Northwestern Memorial Hospital. They have absorbed more than $273 million in Medicare cuts since 2011. Mr. McDonough, can you see institutions sustaining those kind of cuts and expenditures and continue to provide the level of care and service that they currently provide?
Thank you, Mr. Davison. No, I don't see that. I think there's a real difference across the country right now in terms of the financial health of hospitals, frankly, between states that have expanded Medicaid under the ACA and states that have not. The states that have expanded, along with the robust expansions through the marketplaces, have seen much greater financial health. And in states that have not expanded, there has been a far higher rate of hospital closure and of a serious financial dilemma facing hospitals and other medical providers in those states. So it's a real difference and an indicator of what may come were there to be total repeal. Sorry.
Thank you, Mr. Chairman.
I now recognize the gentleman from Florida, Mr. Curbelo.
Mr. Chairman, thank you very much for holding this hearing. It'll be my honor to serve under you in this Congress and with my colleagues here, especially Ranking Member Mr. Lewis, who I was proud to welcome to my community recently to celebrate Dr. Martin Luther King Day. And I also want to thank the witnesses for their testimony today. Dr. McDonough, we share someone in common. Dr. Julio Frank was the dean at your school. He has since moved up in the world, transferring to the University of Miami, where he serves as president. Happens to be my alma mater. Mr. Chairman, although enrollment in the ACA is relatively high in Florida, particularly in the Miami-Dade metropolitan area, choices continue to decrease and premiums continue to rise. This year, the counties in my district have lost insurance carriers. Monroe County lost 1 carrier, and Miami-Dade lost 2 carriers participating on the exchange. I've heard from people in my district about how the current system has reduced their choices and increased their out-of-pocket costs. Emily, my constituent, explained that she is paying over $700 per month for a plan with a deductible that is over $6,000. But still, she has been unable to find a doctor in her area who will accept her insurance. Even though she has insurance, her options are severely limited and premiums continue to increase. Mr. Miller, I have a question for you. These examples that you've heard here today, and I think it's important that we raise them because statistics are fundamental to understanding what is happening in the world, but these real-life human examples matter also. Do you believe that these examples are isolated, unique to our districts, or are these the types of things that are happening all over the country?
Well, there is a battle of warring anecdotes, and everybody has to have their respective horror story, and you can get them on both sides. In the aggregate, no, though, we know that this is not working out and reaching its residual level. I'd comment somewhat in light of some of the discussions here that I'm surprised at this embrace by folks who are more favorable to the Affordable Care Act of what you might think of as trickle-down economics. Let's first take care of the hospitals. Let's first take care of the insurers, and maybe some people on the ground might eventually get some benefit from this. There was a very interesting academic study of the Medicare expansion population, one showing that it had grown quite larger in terms of the cost per capita for the new newly eligible able-bodied adults, but it hadn't necessarily delivered any more services. There's another study that indicated the Medicaid beneficiaries actually valued the coverage they received at about 20 to 40 cents on the dollar. So we're pumping more money into the system, but it isn't necessarily getting down to the ground level where it's actually improving people's care. And that's because it's a system designed not for the beneficiaries at the end of it to be calling the shots, but somewhere along the line we've determined what's good for them and what they should receive. And it works for other people in the system, doesn't necessarily deliver that value at the bottom line for the consumers we supposedly care about.
So, Mr. Miller, are you suggesting that perhaps major healthcare special interests such as hospital chains, insurance companies, and pharmaceuticals were too influential in the drafting of the last healthcare reform legislation?
The previous administration had to cut a deal, and in some cases they had to give as well as take. And part of that deal was to make sure that they had placated those interests first in order to get the legislation passed.
Mr. Graham, with regards to the individual mandate, some suggest, well, this is, as we have kind of concluded here, not working very well. Perhaps the solution is to raise the penalty and coerce more people into signing up for health insurance. I don't think that would be a very popular measure, and I assume most members of this committee and in this House would probably not be predisposed to supporting that kind of measure. What are some alternatives?
I think Mr. Miller proposed some good alternatives. I think Professor McDonough's criticism of those alternatives is also valid. There is a certain population, if you're just going to say you've got to maintain continuous coverage, you've got to, or pay a fine or whatever, there is some level of the population that will not pay that. This is just a reality. They will, you know, when you lose your job, your mortgage payment or your rent comes first, and you're going to drop your health insurance premium. So there'll always be some population that has to, you know, I hate to say be taken care of, but the social safety net. And I know on your side of the aisle, you've talked about high-risk pools, things like that. I would just like to point out that, you know, Massachusetts had a reform that had some good things, some bad things. The gentleman from New York who's left, every state had all these tools at their disposal. So what I like to say is if we don't know the perfect answer, the magic bullet, let's let 50 states try and figure it out and learn from them.
Thank you. I yield back.
I now recognize the gentleman from North Carolina, Mr. Holding.
Thank you, Mr. Chairman. I'm going to pick up where my colleague, Mr. Meehan, left off. He elicited some good testimony regarding the mandate and the mandate not panning out, producing the numbers. We've got a slide, if we could put up there, of ACA exchange enrollment expectations versus reality there, and you've done a good job of talking about some of the problems with the mandate, but it's clear that the economic modeling that the Obama administration was using overestimated the strength of the mandate. So perhaps, Mr. Miller, you could pick up here. Why would the models overestimate the mandate strength so pretty dramatically there?
I'd say the first reason is they relied upon evidence from Massachusetts and Massachusetts experts, which was unique to Massachusetts as opposed to the rest of the country. And that was built into a lot of the over-assumptions of the high yield from the mandate. They also assumed that it would have larger effects further up the scale, And the reality is, if you subsidize people heavily, as turned out to be the case for basically those below 200% of federal poverty level, you'll get a lot of people, even if they're not crazy about the coverage, they'll take it because it doesn't cost them much of anything, particularly when you add in the cost-sharing subsidies. We've had a lot of complaints about high deductibles. That has differential effects because of the way in which those cost-sharing subsidies in the exchanges tend to mute those out. So when you were trying to get more people to come into this market who were either younger or had a little bit more money or were healthier, it turned out it was a bad deal for them. There's plenty of work done by some economists at the University of Pennsylvania Wharton School, which talked about why it just didn't pay for people to take this coverage compared to either paying a penalty or dodging it in one form or another. So all of this idea that new revenue was going to come in to pay for what we wanted didn't work out that way. And some of that's reflected in the reduced enrollment that was assumed but never materialized because you run out of subsidies to pay for people. And when it turns out that people have to pay for something they don't want, they don't buy it.
Right. Well, you know, speaking of subsidies, I find it kind of remarkable that according to some estimates that we've seen, that only about 40% of the subsidy-eligible population signed up on the exchange. Now, this is concerning. I mean, do you find it concerning, and why do you think it is?
Well, that reflects the fact that as you move further up the ladder beyond what I just cited, which is about 60 to 65%, those subsidies aren't particularly generous. They're there, but they begin to phase out. This was a highly skewed, very progressive, if you want to use that term, approach to subsidizing very low-income individuals, even more so in the Medicaid-eligible population. So mission accomplished in terms of getting that target population, but it didn't fit into the larger economic model, which assumed that somewhere there was something else to pay for this. They tried a lot of other gimmicks in order to do this, but it didn't actually materialize in the way in which it was originally designed. And part of that is because there was a built-in ceiling on how much the individual mandate could ever produce, despite all the theories to the contrary, and also how much money there was actually there to subsidize people. And we found out that we're going to have to come up with some other solutions.
Well, you know, we've got the benefit now of some history. You know, we've got a graph. We've got some real numbers in. And, you know, you mentioned at the top of the hearing in your prepared remarks, you know, that CBO is doubling down on these flawed estimates. I mean, what would the rationale be behind that?
Well, people, when they do models, have assumptions, and they tend to not to want to let go of them. There are some things external to what originally started out that have moved around. Certainly the Supreme Court decision changed some of the projections in terms of Medicaid enrollment. But the ingrained view that somehow the individual mandate was going to draw in all these people and they were going to comply and was going to be enforced didn't work out that way. Potentially, by some, you know, standards, you could have about, you know, at one time they had a 30 million target population, and it turned out that only 3 million of those people were actually, you know, were paying the individual mandate as opposed to staying uninsured. It's the difference between theory and practice. We've learned a lot about theories. We need to go back to re-examining what will work in practice.
Thank you very much. Mr. Chairman, now you back.
We have been joined at this hearing by our fellow Ways and Means Committee member, Mr. Kelly. As is our custom, he will be permitted to ask witnesses questions. Now that the members of the subcommittee have concluded their questioning, Mr. Kelly from Pennsylvania, you are now recognized for 5 minutes.
Thank you, Chairman, and again, thank you for allowing me to participate today. All three of you are here for a reason. We talked today that the purpose of the hearing is to examine if the individual mandate penalty is actually stabilizing health markets, okay? And we talk about a lot of different things. I've got so many constituents back home that now have a policy but don't have any health care. So between the premiums being where they are, deductibles being where they are, co-pays being where they are, I know there's reference made to Medicaid. The question is, who all accepts Medicaid as payment? How many actual providers of health care say, no thanks, it doesn't begin to cover my costs of delivering. So I guess what it comes down to, if we're talking about this, and if a big part of the individual mandate was going to cover the cost of all these things, the question is, did it work? Is there anybody of the three of you that can say this was, it was well intended? I'm not saying it wasn't well intended. And Mr. Miller, I love the fact that it's theory versus practice. And again, it's assuming things without looking at reality. People usually don't buy things they don't want, and they certainly don't overpay. It's okay if they're being subsidized, but they want, out of their own pocket, they'll say, you know what, thanks, but no thanks. Has this worked at all? Mr. Blunt, go ahead. I mean, you know, if we're trying to get to an end here, I want to find, what has it done?
I always try to be a little more balanced in this approach. We had a lot of bad policies incorporated into the Affordable Care Act, not the individual mandate alone. The way I would first put it is the individual mandate, not only did it not work, it didn't save those other bad policies. So we need to re-examine more than just the individual mandate in itself. The reason why coverage may not be attractive to people may be a part of the way in which we tried to standardize coverage in certain ways, which meant that suddenly it no longer appealed to people in the same manner when they were paying more of the costs than they did before and weren't highly subsidized. So we've got a lot of different things to put back take out of the bottle and reassemble. But the individual mandate itself did not provide some extra boost. And you can't keep subsidizing people to basically say, come on. Instead, what we got were limited networks, lower actuarial values and higher deductibles for people who saw the cost and they didn't want that coverage and they're complaining to you about it. That's how we created a new distortion to deal with the old distortions.
So can I address?
Oh, yes,
Sorry,
please,
so
please.
Thank you for the question. So just the question, does this work? Well, work is obviously in the eye of the beholder. But just let me give you some responses to does this law
Before
work?
you do that, Mr. McDonough, if it's in the eye of the beholder,
Yeah.
I've got 2 or 3 pages of people back home in my district are saying it doesn't work. So in the eyes of a lot of beholders, including the majority of this country, it doesn't work.
Okay. So lowest rate of uninsurance in the history of the United States. Drop the rate
But
of...
sir, listen, I don't want to equate having an insurance policy with having health care. Huge difference.
Rates of satisfaction among people who've been enrolled in Medicaid and people who've been enrolled in exchange policies, around 80% satisfaction. Drop in the rate of uninsurance among America's children by 50% over the past several years. The rate of financial security and the drop in medical debt experienced by Americans across the country, a substantial drop. Rate of increase in per enrollee Medicare spending is the lowest it has been in the history of the program since it was created in 1965. Those are just 5 things.
Sure.
You can go on and on. So
Where's that study from?
these are all different studies, so I'd be happy to share the sources of
I'd like
all
the
of those from
information,
you.
and I appreciate that.
Happy to do that.
Mr. Graham.
I think what Professor McDonough stated, those facts are certainly cohere with what I understand about a lot of things, but very little of that has to do with the individual mandate. You know, there's been some Medicare changes going on. Most of the effect of the Affordable Care Act in terms of coverage is Medicaid, and I know I'm going to provoke some folks here, but I don't like to include Medicaid as insurance because Medicaid is a welfare program. So as long as we include more Medicaid enrollment as insured, that's like saying more TANF or with having a job. It doesn't make any sense, you know? So if we're going to be coherent about it, we're giving people more welfare benefits, that's fine. If that's what y'all want to do, that's your prerogative as the folks who tax and spend, that's what you're going to do. But let's not pretend that we're making people more individually responsible through this mandate. And as you say, for very many people, the small business owner, the self-employed person, it's just driving them crazy, as we've heard from you and so many of your colleagues, trying to figure out what the heck's going on, how to get an affordable plan, and
Yeah, I know we're going to continue to work, Chairman, and I appreciate, again, being included. We're going to continue to try to work to make sure that the American people understand. They're not going to lose, by the way, their insurance. I mean, Mr. Trump was sworn in last Friday. I don't think anybody's walking around the country right now and had their insurance pulled away from them, so that's kind of a false narrative. But we've got to find something that makes sense. None of this makes sense to me economically. Why would anybody stay in the insurance business to lose money? Thank you.
I now recognize myself. We spent a lot of time on the mandate. I want to shift gears just a little bit and talk about affordability and access. My background before I got here, I've been here about 10 years, but before that, 30 years. And I think back 30, 40 years ago, companies paid or people had access to low-cost, high-quality health care. I thought back a few days ago, and I was thinking back 20 years ago when I was chairman of the chamber in our area. We had 2,500 businesses, most of them 15 employees or less. The number one issue, 20 years ago, and this is before the ACA to give them, to talk about that a little bit, but 20 years ago, the number one issue when we surveyed all our members was access and affordable health care. And it just seems like it's accelerated to the point of being absurd. The typical individuals, it's not unusual in my area in Florida, Sarasota, Florida, a couple could be paying $2,000 a month for health care. That's outrageous. That's more than the car payment, house payment. I read the other day, and I shared this with our people, in the front page, I think with USA Today, 62% of Americans don't have $1,000 in the bank. I thought to myself, and I look back, you could talk about wages and everything else, but one of the things that's gutting the middle class, I think, is health care costs. You get the subsidy, maybe it works for you, but people just outside the subsidy, because small businesses and everybody else, they can't afford to provide it. It's $1,400 for a family of four, $1,600. So the small business might pick up $600, $700. It's getting passed to the workers. And that's why nobody has anything. So my thought, when I first heard about the ACA, I was concerned back then about the cost of health care, and I was open-minded if it bent the curve on health care. But I heard what you said, Doctor, but I can just tell you in our region in Florida, it's not unusual here every single day, rates going up 20 and 30% for small businesses and individuals. That's the reality. So I guess I'd ask any of you, Mr. Miller, Mr. Graham, let's start there. What are we going to do about your thoughts in bending the curve? It's just, and I know it's a big discussion, but I'd like to just have maybe 30 seconds each of you just to give me your point.
All right. That is a bigger discussion.
I know it's a big discussion.
So let me simplify. This may not be the politically astute answer.
No, I just want to hear the answer.
If we keep pumping more money into health care, it's going to cost more. Now, we want to do that. We need to think about that a little bit more surgically. So the approach might be to actually have the individuals supposedly benefiting from this to control those dollars and decide how they want to spend it. That will be a different type of result in terms of better quality health care at a lower price over time. We've tried subsidizing it. We've tried regulating it. We've tried placating everybody in between. We need to get it down to the ground level and decide what people actually want to spend their money on. And that includes trading off health care with better wages. And we need to stimulate economic growth. We need a healthier population. We need a better health care delivery system. Those are all things well beyond the little games we play with individual mandates and insurance subsidies. That's a bigger discussion, but we need to focus more on that.
Yeah, I would agree with Mr. Miller, and I would point out that all this money going into the Obamacare exchanges stuff, it really goes to insurance companies. We advocate consumer-driven health care. We don't give any tax credits to individuals that they can spend directly. And I know one of the members talked about the premium is more than the rent. Well, when I pay my rent, I move in that day and I start living there. I pay for these insurance policies and they don't kick in until I go to the hospital. So if we're going to help people, let's help them pay directly for care, and we have some good experience that can help reduce costs.
Doctor, I'll give you an opportunity. Take a few seconds and wrap up.
The major challenge, it seems to me and to many other experts with whom I work, is to change the underlying incentives in terms of the delivery of medical care, to move away from a system that rewards providers to do more and more through fee-for-service, and instead to move toward a system that rewards providers when they actually provide quality value service. And we have a number of important directions that we're going in. The nation is moving in this direction regardless of what happens to the fate of the ACA. You saw it in the MACRA law, that the bipartisan bill that passed the House and the Senate in 2015. That is not a rejection of the direction that the ACA started. It is an enhancement and an acceleration of it. That's going to continue, and I think that is really probably the most important dynamic that is going on right now in terms of moving our system to a different place.
Let me just conclude. In Florida, I was chairman actually of the Florida Chamber down there too. It's the biggest issue. the cost of health care keeps going. It's not just the last 8 years, it's been the last 20 years. It's out of control, out of hand. We've got to find a way we can work together for the betterment of everybody in the country. I'd like to thank our witnesses for appearing before us today. Please be advised that members have 2 weeks to submit written questions to be answered later in writing. Those questions and your answers will be part of the formal hearing record. With that, the subcommittee stands adjourned.